Welcome back to the channel. In today's video, we are going to be talking about two stocks that went in complete opposite directions. One skyrocketed, one completely tanked, and all within a day or within the week. And so the purpose of this video is to really talk about, why it might be important to invest in index funds, mutual funds, and ETFs instead of investing in individual stocks, even though I do like to look into those as well. Don't forget to smash that like button. Don't forget to subscribe, and if you could, please comment below. I'd really appreciate it. Without any further, let's get back into this video. So earnings season is upon us, which means companies are announcing how they did over the last quarter of the year. So the economy as a whole continues to be strong, and overall companies' earnings reports have been pretty good so far, even though we're really early into it. One of the stocks that we're going to look at changed price because of news and an analyst's opinion essentially of the stock, and the other changed because of their earnings report. So let's first start with the positive news, the positive stock. So that is Tesla. They just released their amazing third quarter earnings report. This is a stock that I thoroughly do like, and it is one that I've talked about before. I've just been too afraid to invest just because of the volatility. This stock is up and down, so I haven't been able to do anything with it. I do believe in this company, but today, October 23rd, after hours, this stock skyrocketed 20%. So it went from being in the mid 250s to closing in at $305 per share. So let's take a look at why and what went on with this stock to cause it to do that. If you first take a look here, you'll see that it says Tesla shares soar after crushing third quarter earnings. So let's just quickly take a look at the two key points here, and then we'll go a little more in depth with that, but we're not going to spend a whole lot of time. Just want to share that Tesla stock is booming after today. It'll be very interesting to see what happens in the morning. Tesla reported third quarter revenue of $6.3 billion and earnings per share adjusted of $1.86 on Wednesday, which is today. The other little bullet says shares spiked more than 20% after Tesla posted the surprise profit and said it was ahead of schedule with a new factory in Shanghai. One other little part that I kind of just grabbed from this article that I will be linking in the description below. The electric car maker gave investors plenty to look forward to next year, at least a glossy 28-page investor update filled with photos from its new factory in Shanghai, where Tesla said it's already begun trial production runs. The company also said it was ahead of schedule in its long-awaited Model Y crossover, which it now expects to launch by next summer. At the same time, Tesla says it is planning to make a limited run of its Tesla semi-truck next year and hopes to soon announce the locations of its European Gigafactory, where it aims to begin making electric vehicles in 2021. And then here's what the results were versus analysts' expectations. So the adjusted earnings per share of $1.86 versus the expected losses of 42 cents per share. And that essentially right there is why this stock did what it did, because they were expected to lose 42 cents per share, and instead they earnings came out $1.86 in profit per share. So right there was the huge news. I think this is going to be, there's still going to be a lot of volatility. There's still going to be a lot of questions to be answered. But I think, when a company like this is starting to be profitable, it's definitely a good sign for things to come, which is why people were so excited with Tesla today. Moving on, completely opposite. Let's just take a look at Beyond Meat. Because they were the big loser for the day and week, and I'm going to show you up on the screen kind of what's happened over the last day, over the last week, month and 3 months. If you're unfamiliar with the company, they're a plant-based meat substitute company that has been all the rage since it IPO'd earlier this year. Over the last 3 months, and especially the last week, you can see the company is struggling and falling like a knife. As you'll see soon, the outlook is not good either. I'll have this linked in the description below, as well as another article on Beyond Meat, but just the title says Beyond Meat initiated at sell as large competitors make gains in plant-based food. So not a good title. Just a couple of notes. Syndrome notes that many people think Impossible Foods' Impossible Burger tastes better than the Beyond Burger. The plant-based meat market is booming with Tyson Foods, ticker symbol TSN, Kellogg Company, ticker symbol K, Hormel Foods, ticker symbol HRL, Conagra Brands, ticker symbol CAG, and Kroger, ticker symbol KR. Just some of the big names that are making inroads in the plant-based meat alternative category. But Sundaram says Beyond Meat and Impossible Foods are currently leading the charge thanks to partnerships with fast food players like Burger King, which has the Impossible Whopper, the Del Taco restaurants, and Dunkin' Brands. McDonald's, I know, is a player in this game as well. But here's the big kicker and why the outlook is really not good for this company, on top of all the competition. Arguably, the number one reason for investors not to buy Beyond Meat shares this time is the fact that Beyond Meat's lockup period is important here, expires on October 29th. The CFRA said, on this date, up to 48 million shares, or about 80% of the shares outstanding, may be eligible to be freely traded in the public market. Given the dramatic appreciation since the IPO, we expect many insiders and private equity funds to cash out, putting further downward pressure on the stock. So those big players are going to have the opportunity to sell after October 29th, and generally when a stock is sold, the stock price goes down, especially when it's held by those big players. And just to go back to that lockup period, that's known as lock-in, lock-out, or locked-up period. And it's a predetermined amount of time followed an initial public offering where large shareholders, such as company executives and investors representing considerable ownership, are restricted from selling their shares. So it will be interesting to see what the price of this stock does, especially on October 29th, as those big time investors have the opportunity to sell out and make a profit, since it did IPO at $25. That's really all I want to say about these two companies. I know it's not a whole lot. I wanted to keep it short and sweet, but hopefully give you some perspective. So there you have it. Hopefully this shows you how volatile single stocks can be in a negative and positive way, to hopefully help you understand that you need to really be careful anytime you invest in single stocks, as opposed to mutual funds, index funds, and ETFs, where you have a whole pile of stocks that are all together, and it helps to make it a much more safe investment rather than just simply relying on one individual stock. So stay tuned for more videos, and remember, I'm layman and these are my terms.